Hi there, Shingirai here again with another update on portfolio performance over the past week. On the 6 days of the quarter, on a quarter-to-date basis, all 10 of the CBAM portfolios outperformed their respective benchmarks in a relatively risk-on start to Q4, with returns ranging from CBAM 1 returning 1.2% up to CBAM 5 V2 returning 2.7%. We do see some comeback there in terms of our hedged US equity position. There on the back of a strengthening cable, which had tested a low south of 1.05 over the past week, and now almost testing a high of 1.14, and then sort of settling in that range of around 1.12. That would see our Fidelity Europe, S&P 500 up 5.49%. And then again, switching over to the European story, where we're beginning to see some resolution there in terms of the energy crisis, which had been an impediment over the past quarter and 3-month basis, where Bailey Gifford Europe is now up 4.98% on the first 6 days of the new quarter, and Allianz Continental European up 4.69% on the first 6 days of the quarter. Switching over to detractors to performance, we do see some headwinds there from HSBC MSCI China, down 1.92%. But obviously, as I've been highlighting the past couple of weeks, really would be looking ahead to the Chinese Communist Party Congress coming up there on the 16th of October, where we hope to get some resolution around some gradual improvement to the zero-tolerance COVID lockdown policy. And that would see HSBC MSCI China down 1.92% on the week. We also saw some weakness there from the emerging market bonds, as expected, which had been fairly resilient in all accounts, on the back of a stronger US dollar, down 1.2% on the week. And then switching over to equity Indian subcontinent, the World Bank recently just degrading their growth expectation for the Indian economy, down from 7.5% to 6.5%. And that would see headwinds for Indian equities as investors mount this outlook, and that would be on the back of the Russia-Ukraine war, and also some spillover from global monetary policy tightening, and equity Indian subcontinent down 1.12%. I won't spend too much time on the 3-month basis, where 1 of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from minus 1.87% for CBAM 5 down to and then also looking in terms of most positive contributors to performance, that would be Pictet Clean Energy up 12.18%, and that will be on iShares Global Clean Energy also up 10.83%, and that's on the back of obviously this rising energy costs that has been an affliction for European equities. And most recently, we've seen that surprise move from OPEC Plus deciding to cut production by 2 million barrels per day of output, also adding to some upward pressure on the energy prices in Europe and globally, and that would see investors really flocking towards these alternative clean energy solutions through Pictet and iShares Global Clean Energy. Equity, obviously there, the story on India has been a more stronger growth outlook, with some containment of inflation in the Indian economy and improving PMI numbers, really giving optimism to investors over the past 12 months, despite the recent adjustment from the World Bank. In terms of headwinds for China on the past 3 months, we really have been touching on these in terms of weakness in the property market, and also some fear that there may be spillover into the financial markets. But really the story here has been looking forward to that slowdown in growth, as I've mentioned and alluded to before, related with the zero-tolerance COVID lockdown policy, and investors really itching to get some resolution on this. And that would see us really looking ahead to the 16th of October People's Congress, where we expect some sort of resolution on this matter.